Hello and welcome to the Fundamentals of Securities Lending 2021. I'm Roy Zimmerhansl, and in this video, I'll dig into three things: the characteristics of securities lending, where it happens, and key statistics. And I'm really pleased to say that today I've got the sound on, I think, and I hope. So if anyone's watching out there and you can't hear me, and I just look like I'm mumbling, then please let me know. So I hope you're all having a great Saturday, and thanks for taking the time to join me live. And for those of you watching on replay, I appreciate you taking the time to watch. So if you've been with me in recent weeks, then you'll know that uh, this week, the special thing I have for you is that the microphone's on the first time rather than the second time. So if you've been with me in previous shows when the microphone's been off, but you stuck with it, or maybe even if you didn't stick with it, maybe put in the chat, type in me, just so that I know that you've made the effort to stick through it. I know a couple of people did last week, and I really appreciate you taking the time to do that. Now, before I go really any further, I just want to let everyone know that in a few minutes, we're going to be switching this to only YouTube. Right now, we're on LinkedIn Live. We're on YouTube and we're on Facebook Live. And the simple reason for that is most people watch these things on replay rather than live. And it's really super hard to find sometimes on LinkedIn in particular, but also Facebook. So we give everyone about 10 minutes to switch over, and then and we'll just carry on. So we'll get started here. I'll put up the channel in a minute for YouTube if you're not there, or the link, and that way you can always catch up. Even if you're on LinkedIn now, you'll be able to catch up later. So I'll put that up in a minute. But first of all, if you're out there now, just drop in the comments wherever you are, where you're actually watching from. We tend to get quite a diverse audience and geographically spread out. So always excited about that. We do 2 live streams a week. This one on Saturdays at 1 p.m. BST, and on Wednesdays at 10 a.m. BST. So we do 2, and that one we usually start off with someone from New Zealand, where right now it's actually the middle of the night. So we do get quite a broad audience there. And a special hello to Jean-Pierre. Appreciate you joining me from Toronto. A little bit better timing. Jonathan, great to see you here. Haven't seen you in ages, and it's great to have you joining us. And Andrew, Phnom Penh, amazing. That's great stuff. Vietnam's a super interesting place. Aside from when I went there on holidays in Hong Kong, it's a great business location. And one of the podcasts that I follow, the guy is actually based in Vietnam as well. So interesting stories that he has to tell from that. So the idea is what we actually do here is we talk about it started off with really an Ask Me Anything session. And then at the end of that first Ask Me Anything session, I got quite a lot of feedback from people saying that the concepts that I was talking about were really quite complex in some cases. And what most people thought would be helpful would be a basics or a fundamentals. So that's what we've done. We started last week with the first session. This is session number 2. It'll probably be at least 8 sessions. I've got them mapped out. I aim to make it half an hour, but I have yet to actually do it in half an hour. So we'll see. For those of you who don't know me, I run PeerPoint Financial, consultancy focused specifically on securities lending, collateral management, and repo. And I've been teaching about securities lending since the early 1990s. And actually, when Jean-Pierre and I worked together many, many years ago, I actually did my first stock loan in Toronto in 1981. So, as I said, in this session, we'll be talking about the essential features of a transaction. Then I'll tell you where it's being carried out, and then I'll close with some key statistics of the business. If you have any questions, feel free to drop them in the chat. What I'll actually be doing is I'll try to answer relevant questions for this session in the chat, or sorry, I won't answer them in the chat. You put your questions in the chat. I'll answer them live if they're relevant, right? If they relate to something I'll be covering in a future event, I'll still respond to you in the commentary afterwards. Or you can drop me a line and I'll put my email address in later, and I'll contact you directly and answer any questions that I can. So as I said, it'd be 30 minutes. And just again, just to be clear, I'm going to be switching in sort of 2 minutes now, only to YouTube. And as you can see, the link below, it's just a bit.ly link and then Roy Live. So hopefully you can see that. And now what I'm going to do is I'm just going to switch screens, and I'm going to share a live screen here, go through the slides that I'm going to be using in this session. Okay. So just give me a second to queue all that up. And okay, almost there, everyone. I am now sharing. Hopefully you can all see that. Let me just change the format so you can see it a little bit better. Hopefully that's a little bit bigger for you. As I said, we do this every Saturday at 1 p.m. These are the 8 weeks that I have mapped out. So last week I did kind of, why does this business even exist? And hopefully I answered that question. Aside from it exists to give me a job. And it's really fundamental to really every capital market. And I think that will become clear as and when we get to the markets where it's actually covered. So without any sort of further ado here, what I'll do is I'll go to the next slide. So what we're going to be talking about today, as I said, characteristics and statistics. We've talked about that. So let's just kind of get to it. So securities lending, it operates under a master contract. So you don't do individual contracts per transaction. You kind of have one relationship governing document, and that covers really all the transactions that you actually do. It's a temporary transaction. And what do I mean by temporary? Well, it's temporary because you don't own it, right? If I own it and I'm lending it to you, then at some point I'm going to ask for it back, or you're going to be done with it and give it back to me. So it's temporary. Either side can cancel it, can return it, can close it out whenever they're finished with that. And I'll come back to that in the next slide. So it's temporary and it uses a master contract. So now I'm just going to make an adjustment. I'm going to switch off of a couple of the other platforms, and we'll switch to YouTube only. Just bear with me. Hopefully you are still with me and on YouTube. If not, thank you for the last 10 minutes. Right. So getting back to it, temporary transaction. So if I lend it to you, it's not forever. Otherwise, that would be called buying it. You would be buying it instead of borrowing it from me. And either side can cancel the transaction. Now, when I talk about transfer of title, what I mean by that is that if I own it today, before there's a loan, and I lend it to you because you have a reason to borrow, and in future sessions we'll cover why people borrow in more detail. But you, as the owner of the asset, you're a new owner. You have all the rights, all the privileges of being an owner. You can do anything that an owner of an asset would do. Okay, so you can sell it to somebody else. You can do nothing with it. You can just sit back and collect dividends if you like. But realistically, since you're also paying a fee, you probably need to have some kind of a purpose that generates you some income or some profit or a potential for profit at some point in the future. So it's a fee. And during that period, that fee gets adjusted based on the value of the stock. So if the value of the stock that I've lent you goes up, then what will actually happen is your fees will go up, right? If the value of that stock or bond goes down, your fees will adjust accordingly. So it's based on the value of that transaction. Now, the borrower, look, my risk is if I lend you something, what happens if you go out of business? And so, as a way to protect lenders from counterparties defaulting, the borrower has to provide a lender with collateral beforehand. When I say that it's usually more than the value of the borrowed security, that's true. It's almost always more than the value, but sometimes people will do transactions where it's 100%. So if I lend you something that's worth 100, I might take 100 of collateral, but usually it's 102 or 105 or 110 for every 100 of loan security value. And we check that price every day. We check the value of the stock or bond I've loaned you, and we check the value of the collateral that you've given me. If it goes above the threshold we've agreed, I might give you your collateral back. If it goes short from that, then you have to give me some extra collateral. Okay. So standard contract, temporary transaction, borrower pays a fee and gives collateral up front, and that collateral is worth at least as much as the loan security and probably more. Okay. So that's characteristics set number one. Let me just sort of move on to the next slide. Right. Now, a few more key points here. The original owner of the asset. So in this example I keep using, I'm the owner of the asset. I decide to lend it to you. Well, I'm going to lend it to you, but in our contract, that master contract that I talked about, I keep all of the benefits of being an owner. So if a dividend gets paid, well, normally they would pay it to me, the company. But of course, I'm not holding it anymore, so they can't pay it to me. So I expect you, the borrower, to pay me an equivalent amount. So if I was expecting a dividend of 100, rather than get that 100 from the company, I'm getting that 100 from you. If there is a some kind of a rights issue or a stock split, and last year was a great year for stock splits with Tesla, for example, and other companies. If I lend you 100 shares and that 100 shares after a stock split is now worth 300 shares or 400 shares, then when you give me that stock back, you have to give me 400 because that's the equivalent value of it. Now, I've highlighted voting here because voting is one of the critical elements that people really need to look at before and during their sort of participation in lending, because there's only one vote per share of each company. And if it was sitting in my hands, then of course I can vote my shares. But if I'd lent it to you, and as I said, you have all of the rights of an owner at that stage, well, that vote would now go to you, except probably you have sold that to somebody else because you've probably done a short sale. But I can't guarantee that. But in any case, the only thing I know is I don't have that vote anymore. You do, or whoever you sold it or gave it to, they have that vote. So that's a problem for some people, and I'll come back to that in a minute. So everything economic I get from the borrower instead of the company, except for voting. Now, the second point there is the overwhelming majority of trades are called open trades. And what I mean by open trades is if I lend you something today, I'm not making any commitment that you can have it tomorrow or the next day or the following day. I'm just saying to you, it's available, right? It's yours. You can do whatever you like with it until I ask for it back. And the same thing with the borrower. The borrower isn't making any obligation to keep it for a day, a week, or a month. What they're actually doing is they're borrowing it until they don't want to borrow it anymore. So both sides can carry on with that, right? And then when either side, as it says in the next point, when the borrower, when they're finished with it, they can return it at any time. And a lender So the me in this case, where I'm the investor and I've decided to lend it to you, I can ask for it back anytime I like. And I don't need to have any kind of qualifying reason for that. I just have to ask for it back. I can ask for it back because I want to vote it. And that's usually one of the reasons why people will ask for their shares back. I'd lend you a stock, but I want to vote those shares. And the only way I can guarantee those shares is by asking for those shares back. So they're in my hands again, and I have that vote. But I might ask for it back because I've sold it to someone else, right? And that's again probably the most common reason why people ask for shares back. So you can have it while I don't need it. When I've sold it to someone, I need it again, and so I will ask for it back so I can satisfy my sale obligation. And then the final point is really quite an interesting one. Um, Unlike when you buy or sell a stock or a bond and you just get that one price and that's just the price that it was done at and everyone moves on. But in a stock loan or a bond loan, this is really a supply demand business. So the fees are determined by the supply, how much stock is there available, and the demand, how many people want to borrow that stock. And so if those supply demand economics change, well, then it's probably over the long term in everyone's interest to make certain that the price gets adjusted. So if I'm lending and there's not a lot of demand for it, so I just generate a very low fee, but then something happens in the company and the demand to borrow that stock goes up, well, it seems only fair that I should get what the value of that loan is today, not what it was yesterday, last week, or last month. So I can, as a lender, I can ask for a price rise at any time. And a borrower, by the same token, they might have borrowed the stock from me when it was very much in demand, and then things have changed and it's no longer in demand anymore. So they might want to lower the fees. And so on a daily basis, there are ongoing discussions between borrowers and lenders to negotiate, renegotiate, and adjust the fees. And they don't always agree. So I might ask you for a fee increase, and you might say, Roy, forget it. I can find it somewhere else for the price I'm paying it at. I have no reason to pay you a higher fee. And I might say, that's fine. No problem. Then just give it back to me. If you don't want it, I'm sure somebody else does. So that kind of thing happens all the time, as I say, just about every day. And it can lead to closing of trades and opening new trades. And as I said, last point, the borrower can return a stock anytime they like. And as a lender, I can ask back. So this gives all kinds of flexibility. Now, in addition to the specific demands, there is a relationship aspect to this business as well. So you always have to bear that in mind. You don't want to be unnecessarily penny pinching, whether you're a lender or whether you're actually a borrower. Okay, um, uh, so it's kind of that ongoing relationship thing. Because if it's just a hassle dealing with you, then next time I want to actually do a trade, I might not come to you. I'll go to someone else first. I might get to you, but only if I can't do transactions with somebody else. So that's the other aspect. So again, number one, the original investor that lends out their securities, they keep all of the economic benefits. The trades are done on an open basis so that either party can close out the transaction whenever it suits them. And during the life of a transaction, both sides can adjust and adapt the fees. So those are the key characteristics. I hope that all makes sense to you. If not, always feel free to drop a question into the chat or into the comments or whatever platform you're on. So as I say, put your questions in the chat. Now, what I'm going to do is I'm going to move on to sort of the location of this, because people are always surprised by where this business gets conducted and just how big a business it is. And I'm just going to expand that out. So hopefully you can see that. Let me just get rid of that caption. Right. So now you can hopefully see a little bit better. So it's a global business. There's over 40 countries in the world where securities lending happens. right? And actually, when I was put this slide together this morning, what I realized is I've been to quite a lot of them, so I've actually counted them up. I think there's 44 ish countries listed there, were markets. And I've actually visited 38 of them, talking about securities lending over the years. So that was interesting. The ones that I haven't been to talk about securities lending is I haven't been to Brazil at all. I've been to Mexico, but not on business. That was a holiday. Turkey, I've been and been on holiday, but not on business. Russia, I've never been to. Kenya and Morocco, I've never been to, or South Africa. Um, but other than that, I've been to every one of these countries talking about securities lending over the years. So the reason I say that is just to make it very clear that this is truly a global business. Now, the newer markets have been like Nigeria. So I'm working with a Nigerian stock exchange at the moment to help them promote and expand the business, because they have a really focused objective of trying to expand and improve the liquidity, expand the market size, improve the liquidity of the markets, and add new products and grow the products, things like ETFs and derivatives. So securities lending is really critical to that. I won't go into any more detail on that today, that because that's quite complex, and we're still trying to do the basics. So it is really a critical part. So Nigeria is one, Morocco, Kenya, both very new in it. The Philippines has announced that they'll be going live later this year for domestic participants. So again, that's really exciting. But countries like China and India and Brazil kind of stand out, because it's not really new in any of those markets, but they're still very much constrained. So China's opened up a little bit. And we see that on being a pathway to a much more open market and a much bigger market than it is today. India has that potential, but they have never felt really very comfortable doing it. Frankly, the regulatory infrastructure, for some reason, has never really embraced securities lending. And Brazil has been going for a long time, but in Brazil, it's the structure of it is not unique, but there is only one way to do the business. So it does constrain activity in Brazil, but truly a global business. Now, how global is it? I think what we need to do is turn to some statistics and take a look at that. And so let me just go through to the next slide. Okay. So the next few slides, what we're going to be talking about are the statistics involved in the business. So this, for the next couple of slides, these are taken from the ISLA Securities Lending Market Report. That's a 6-monthly report put out by the European Trade Association. And I really encourage you to go look at that. These are extracts from that report. So the pie chart on the left talks about the supply value. What do we mean by the supply value? Well, what that shows is investors, and the color code is at the bottom there, the key. So the orange sector, it says collective investment vehicles. What that means is mutual funds, in Europe, UCITS, ETFs. They're all in that group. So what that chart says, or the pie chart in the upper left, it says that 49% of the securities available for loan, day in, day out, come from these kind of mutual funds, ETFs, and UCITS. So the next biggest group is pension funds in the kind of teal color, then government funds and sovereign wealth funds, very big participants by value, even if not by numbers of participants. And then followed on by sort of a catch-all, which is the yellow other, and insurance companies, which is the purple group. But again, insurance companies, even at that small size, they're pretty big players in the market, because as the little up arrow shows, the lendable assets are now 24 trillion euro worth of assets being available for loan. Now, that was at the end of December 2020. That's at the end of that's at the end of um, uh, uh, December 2020. The report came out in March. As I said, it's a 6 monthly report. So the figures have gone up since then because more people have gone into the market. So it's more than 24 trillion. And that's a pretty big number any way you look at it. The chart on the right uses the same color code, but that shows how much is on loan. So the first one is just about if I make my portfolio available, whether people borrow it or not, that's the amount there. The bottom right, though, shows how much is actually being borrowed based on the investor type. So if you just look at the orange boxes, if we look at the left-hand chart, we can see 49% comes from this mutual funds UCITS ETF community in terms of availability, but only 35% of the assets on loan come from that group. That's mostly because of regulatory restrictions. Because those collective investment schemes typically serve retail investors, those funds have to be able to liquidate assets really quickly. And so, although I said you can ask for your securities back at any time if you're a lender, and that's true, the problem is you can't get it back immediately. If I ask for it now, my counterparty has probably 1, 2, or maybe even 3 days to get it back to me. And if an investor wants to cash in on their mutual fund, they want to cash in today. So there are regulatory restrictions for those sorts of funds in most parts of the world. So there's a limit as to how much they can lend out. The interesting one here before we move on is the dark blue group. So that's where I was talking about sovereign wealth funds and governments. They only represent 14% of the supply pool, but as you can see in the bottom right, they represent 21% of the assets actually on loan. So they're disproportionately large in terms of their share of the lending pool, partly because they're big, they have attractive assets, very diverse portfolios, and partly because they're less constrained by regulations and really only constrained by their own sort of governing documents and regulations and oversight requirements. So they just have more flexibility and they get more on loan, and usually they're bigger just by definition. So that's how much is available and how much is on loan, and the total amount of equities and bonds on loan, 2.3 trillion euro at the end of December. Okay, so hopefully that gives you a sense of the size of it. Just a quick point. I'm going to make all of these slides from all of the shows available. So I will put a link in. You can download them and access this and future episode slides. So I will put that in as soon as I can find where I've put the caption. I can't find it right now, so I'll just carry on, but I will come back, and it's 100% going to be in the show notes. So if I can't find the caption and put it up on the screen, you'll be able to go to the show notes. You'll be able to click on a link that will take you to a subscription form where you can download last week's slides, and then as each week goes on in future, we'll just automatically email you the future decks. So just bear with me. Okay, so look, this covers the securities that are actually on loan. Just to look at that, so you'll see it's almost 2.5 trillion euro of assets on loan. I might just blow that up for you so you can see it a little bit better. Hopefully that's a little bit more clear. And that's roughly half and half equities and bonds. So the amount of equities that are actually on loan has gone down slightly. So this again was the second half of last year. So it went down to 981 billion euros. So still a pretty darn big number. But the one that's gone up is government bonds. So it's bonds in total, but really the driver behind that is government bonds, which now represent more than half of the assets that are actually on loan. But you can see year after year, this seems to be going up. There was a dip in the June 2020 column, the second one from the right. That's because of the short selling bans that were implemented after the sort of the market crash in February and March. A number of markets had short selling bans in place. Some of them continued to have it for a long time after that end of June period. And in fact, Korea only opened up this month at the start of May. So, but you can see building and growing kind of year after year. So let's go to the next slide. A few more slides here on some stats. Hopefully, it'll be interesting. So we'll start at the beginning. Revenues for all securities, if you put them back all together, accumulate them all for 2020 was $9.3 billion. The data all on this page come from ihsmarket.com. They've got lots of great data. So have a look at their information. We're only going to sort of gloss over these. But 9.3 billion dollars. One key point earlier on, I said that a borrower pays a lender a fee. While that's kind of true and true for most transactions, sometimes if the lender gets cash collateral from a borrower, the borrower doesn't necessarily pay them a fee. What happens is the lender and the borrower share the interest earnings from reinvesting cash. Again, more complicated than we're going to go into today. And that's why the footnote at the bottom of this says note includes only fee revenue. So actually, the total earnings in 2020 would have been higher than that. Okay. So if we go to the next part, this really, I suggest you take a moment to actually look at this yourself. This kind of shows the spread. So here you'll see the first line is that all securities, $2.5 billion in this case, they baseline in dollars, and about 1.1 billion of that balance is equities. It breaks it down into the different regions, and you see government bonds is 1 trillion 158 billion. So remember, I may have said 1 billion equities is $1.1 trillion of equities, and $1.1 trillion worth of government bonds are actually on loan. It shows a little bit of the change, but the average fee, AVG fee column, the thing that's interesting there is I think it'll just give you an indication of what the average fees are. Now that's 0.4%. So that means 40 basis points. I mean, so 40%, 40 basis points on the value of the loans. So to get a basis point, it's that number divided by 10,000. So it's just under 0.5% a year of fees. Hopefully that's clear. Maybe a little bit more clear. The ADR line, sort of 6 or 7 down, where it says average fee is 2.3%. What that means is if you have $100 of ADRs on loan over the course of the year, that will actually generate $2.30 worth of fees. Okay, so 2.3% of the value of the asset. So now when you consider that you still get all of the profitability and all of the benefits of being an owner, and you get an additional, in the case of ADRs, 2%, or overall, all securities average out at just under 0.5%, that's an extra 0.5% that you can accumulate year in and year out. So it's a good amount of money, and it's a fairly low risk business. Again, in future weeks, we'll talk about risk. I'll just go now to what this upper right-hand chart looks at is only stocks and bonds where the fees are 5% a year or more. 5%. Okay, so more than twice the level of the ADR figure that I showed you. So this shows that around the world, in the latest Q1 2021 period, that the total amount that's actually on loan, generating fees of more than 5% a year, is over $30 billion. So there's over $30 billion of assets on loan that are generating fees in excess of 5% a year. So that's a pretty big chunk. The reason I have the gray section highlighted here is because that represents Asia. And you'll see that most years, Asia is a pretty big component of that. And then last year, it kind of disappeared. Well, that's because a lot of the short selling bans were implemented in Asia, but in particular, I don't know if you could hear that police siren. They are not coming for me, and I will be able to finish this show, I hope. But what that chart shows you in the gray area is that the short selling bans in Asia had a huge impact on the revenue. That's almost all because of South Korea. Okay, and South Korea is a very profitable market, and it was banned in total for 14 months from new lending activity. So there was still existing loans that were outstanding, but they were petering out over time, and no new loans could actually be put on. So that had a big impact. Now, the next one I thought just might be interesting is just a list of the stocks that generate the most money in the first quarter of 2021. And I've just highlighted Futu there because that's the ADR. And if you look at the upper right-hand chart again, you'll see just how big that little red section is compared to previous periods, and that's almost all driven by Futu. Just coincidentally, I checked on the price of Futu today, and it looks like the relative strength indicator says that the stock has been oversold. So what you would expect to see at some point in the future is a little bit of a bounce back. That's bad for short sellers, good for long investors. So it'll be interesting to watch. But that gives you a list of the top revenue generating stocks from around the world in Q1 according to IHS Markit. Now, what I'm going to do is really just kind of wrap it up now because I have been on for 37 minutes, so only 7 minutes over so far. That's quite good for me. But listen, before I do that, let me just go to something else here. Look, I hope you find this stuff interesting. I'd really appreciate it if you could give us a thumbs up or a like or whatever it is. If you're interested in seeing future shows, please subscribe and ring that little bell, and that way you'll get notified when future episodes are actually coming up. If you like this, then that will help us get the word out to more people. And look, it's one of my career objectives to share knowledge and information about securities lending to as many people around the world as I can. You've seen all the places that I've been to talk about securities lending, but not everyone knows about it. I think this year more people have learned about it because of GameStop. Maybe not in a good way, but that's it. But anyway, thumbs and likes really help us. Just one other thing, we do a lot of sort of training courses. We do them. They're free. Some are free, some are paid for. But you can actually go to our website there and just check them out. Again, take a look at the free ones, take a look at the paid ones. We love to educate people about the business, and hopefully you'll find something of interest there. So now let me get back to the summary. So I cleared that out. Right. Okay. So summary. Key characteristics, it's a temporary transfer of a stock or a bond between two investors using a master contract. And as I said, it's active in more than 40 countries, with more countries yet to come. The investor or the original lender, they keep all of the economic benefits of it. They get paid to them by the borrower. The only thing they can't do is vote, but they can always recall to vote the shares if they're interested and interested in giving up to their fees, obviously, when they get the stock back. And as I said, a lender gets a rental fee for giving the shares to the borrowers, but they're protected by the collateral that they take, and that fee that they get can be renegotiated during the period. Now, the positive news here is that although fees dipped in 2020 over the previous year, they've picked up again in 2021. And as I said, Korea has allowed short selling and new securities loans again from the start of May. The value of the transactions have gone up there. Fees will be picking up. So I think it'll be a good year for revenues. Loan values overall have increased. As I said, mostly in government bonds. Equities fell back a little bit because of the short selling ban. But look, government bonds have been making up ground for a number of years now. And in a future session, we'll explain why that's been the case. And so while the balances are in favor of government bonds and bonds overall, the truth is the fees are really generated on the equity side. So approximately 80% of the fees generated in this business come from borrowing and lending of equities. So that's the summary. I think that's pretty much it for this week. I don't know if there's any questions. As I said, again, what you can do is you can put any questions either into the box, either live, or if you're watching this actually on replay, you can actually do it again. You can put questions into the. Hold on. Well, there you go. I wasn't expecting that, was I? But that's the beauty of live streaming, because you never know what you find out, because it's all live. And just like at 2 minutes to going live today, my computer froze up and I had to reboot. So always exciting doing live streams. But look, next week we're going to talk about who the market participants are, the other stakeholders that are involved in this continuum of the business, and yeah, I guess we'll also talk a little bit about the structure of the business. But that's for next week. That's it for this week. And I want to thank you again, whether you're watching this live or on replay. I hope you learned a little bit more about securities lending, and I look forward to catching you next time.